New financial technologies, fintech, have led to the growth of decentralized financial solutions and innovative new business startups. Currently, financial and non-financial businesses and individuals are trying to keep up with the accelerating number of fintech innovations. While new business models are being formed, leading to further innovations, some existing business models are expected to disappear. Initial research indicates that some fintech innovations are challenged by rapid growth, while the future of others remains uncertain. The aim of this paper is to evaluate fintech business models in terms of innovation diffusion theory, IDT, developed by Rogers. Fintech startups are at the center of the fintech ecosystem. Based on the prior research, the different fintech business models operating in various hubs are money transfer and payment, financial planning, savings and investments, borrowing, insurance, blockchain, crypto, and regulation technologies. In short, we call them RegTech. This paper provides a theoretical discussion of why the rate of adoption, ROA, of different fintech business models in a social system varies, and why the ROA of a single fintech business model varies across different social systems. Further, this study helps to understand the indicators related to ROA to predict the future of fintech business models. Discussions about revised Directive on Payment Service, PSD2 in Europe are included. Rogers, in 1962, in his book, which holds the second most cited book in the social sciences, argued that innovation diffusion was a general process displaying patterns and regularities determined by the adopters, places, and/or cultures. Diffusion is a process where an innovation is communicated through certain channels over time among the members of a social system. This requires communication to exchange messages and information about a new idea to reduce uncertainty. The results of the invention, diffusion, and the adoption of innovation leads to social change. In the first part of this study, IDT framework is summarized in 5 stages adapted from Rogers' book, Diffusion of Innovations. The stages are explained with current examples from international fintech industry. The second part of the study evaluates and discusses the developments in international fintech industry using IDT components. The discussion includes adoption rates of various innovation technologies, cross-country comparisons, and new payment systems directive in Europe. Diffusion of fintech innovations. IDT, developed by Rogers, covers a wide range of issues about the adoption of innovations. This process, 5 stages in the forthcoming slide in figure 1. By the way, we have a caricature here. The innovator just drinks a small cup of tea, but as the adopters come after him, early adopter, early majority, late majority, laggard, the size of the coffee grows bigger and bigger. So this is the summary of the whole book, Diffusion of Innovations. There are actually 5 stages. The first stage is the innovation development process, which starts with recognizing a problem or a need at the first stage. In the second stage, basic and applied research. In the third stage, we see development, followed by commercialization, and the final stage is the diffusion. There are some variables determining the rate of adoption, which we will discuss throughout this presentation. And the first variable is the perceived attributes of innovations. The second one is communication channels. The third one is social system. The fourth one is the efforts of change agents or agency. And the fifth one is the types of innovation decisions. We will discuss all these issues related to fintech innovations in the forthcoming slides. And then the innovation decision process starts first with the knowledge state, and then persuasion, decision, implementation, and finally we have the confirmation stage. At this stage, we have either adoption or rejection. Rejection can have later adoption, and adoption can end with discontinuance. When we look at the adopter categories, 2.5% of them are innovators, around 13% of them are early adopters, 34% of them are early majority, 34%, another 34% is the late majority, and in the final stage we have the laggards. And of course we will also discuss the consequences. So this is the framework of the paper. So the process starts recognizing a problem or a need and ends with adoption. At a certain point during diffusion, the rate of adoption begins to increase exponentially, taking off about 10 to 25% adoption to form the S-curve diffusion presented in the figure 2. Innovations in money transfers and payments emerged because traditional mobile and e-commerce products did not answer consumer and merchant needs. As non-banks started to transfer money, it became possible to make payments with a mobile phone at a checkout or with cryptocurrency, digital currency. Crowdfunding, which is a new form of saving and investment formation, emerged largely because of the difficulties after the 2008 financial crisis, when banks became less willing to provide project financing loans to entrepreneurs and early-stage enterprises. Hence, entrepreneurs started to look elsewhere for raising funds, such as project financing by friends and family, extended through social networks and social profiles. Individuals and companies have accessed funds in debt, equity, and donations for projects over the past 5 years. Similarly, because of the high interest rates and limited funds offered by traditional lending, financial institutions, consumers, and corporations started to use peer-to-peer, to borrow from each other by matching lenders and borrowers. They offer low interest rates and an efficient lending process using alternative credit models and data analytics in pricing risks. High-tech industries pass through 4 stages of development. At the innovation stage, the degree of uncertainty is high, so few firms are founded. At the initiation stage, the degree of uncertainty decreases, so more new firms enter the industry. At the third stage, technological competition starts, which makes it difficult for smaller firms to enter the industry. And during the final stage, standardization, the ideal product has been found and price competition started. Now we will continue with variables determining the rate of fintech adoption. And we start with perceived attributes of information. Rate of adoption, ROA, is the number of members using innovation in a social system during a specified time interval. The 5 variables determining the rate of adoption are relative advantage, compatibility, complexity, trialability, and observability. Rate of relative advantage. One of the best predictors of ROA is relative advantage, which indicates benefits like economic profitability, social prestige, or user gains and costs from preferring the new product. A majority of fintech innovations offer economic profitability, such as lower payment fees, lower borrowing interest rates, easy access to funds, higher investment returns and rewards. Other advantages include efficiency and savings in time and effort, like shorter transaction periods. For instance, crowdfunding enables businesses and other organizations to raise money as through donations or investments from multiple individuals. Contributors have a wide range of reward, donation, or equity-based project choices. In the millennium era, many people gain social prestige by showing that they're closely following the latest technology and social media. Members of the society seek to gain status by imitating the innovation behavior of others, as can be seen in the dramatic growth of social media. When individuals adopt an innovation that they should have rejected, then over-adoption occurs. Insufficient information, inability to predict the innovation's consequences, or adopting it for status-seeking purposes may lead to over-adoption. This is a major problem for many innovations, which sometimes happens when an attribute of an innovation is perceived as so attractive that people lose rationality. Past crises in financial markets taught that over-adoption may cause huge losses to investors, so regulations are necessary. In July 2015, there were 2,136 P2P lending platforms in China, settling approximately $13.4 billion US dollars worth of transactions. With 130 closed between January and March 2015, and more than 1,250 regarded as at risk by local credit rating agencies. The speed of the sector led to the enactment of new capital requirements by the Chinese Banking Regulatory Commission. The second factor is compatibility. The degree that an innovation is perceived as consistent with current values, former experiences, ideas introduced already, and the adopter's needs are the compatibility dimension. Compatible innovations are adopted faster and with a lower degree of innovativeness. However, even highly compatible innovations are useful for the adoption rates for future innovations. To achieve compatibility, innovations are presented as a bundle of new ideas called technology clusters, hubs, in which more distinguishable features are perceived as interrelated. Other factors affecting the compatibility of innovations are naming the innovation, positioning the innovation, and indigenous knowledge systems. Complexity is the difficulty of using the innovation. According to IDT, the rate of adoption decreases as the degree of complexity increases. Trialability is the opportunity of experimenting with the innovation. According to IDT, the rate of adoption increases as the degree of trialability increases. Observability. The final component, observability, represents how visible the innovation is to others. As the degree of observability increases, rate of adoption increases. And now we continue with the communication channels. Communication is the information exchange through communication channels regarding an innovation between someone who has experience of the innovation and someone else who lacks any knowledge. Communication is essential for successful diffusion. Two major communication channels are mass media and interpersonal channels. Mass media channels today include social media such as Facebook, Twitter, and Instagram. Pass messages to large crowds through an intermediary. Interpersonal channels, including internal communication channels such as WhatsApp, Facebook, Messenger, Viber, SMS, or email, are direct exchanges between individuals. The social system is another component in the IDT theory. Norms determine the behavior patterns of individuals living in the social system. Because norms guide individual behaviors, they can hinder change. Although all the system's members are not identical, a structure exists. The formal social structure is the patterned arrangements of individuals in a system that makes their behavior predictable, whereas the informal social structure determines the level and timing of interactions in interpersonal networks. A communication network consists of individuals linked by patterned flows of information. An individual's network links affect rate of adoption. Interconnectedness, which is the degree to which the units in a social system are linked by interpersonal networks, is positively related to the rate of adoption of innovations. Change agents' efforts. Change agencies employ change agents to influence the client's innovation decisions. An innovation's rate of adoption is affected by the change agent's promotion efforts. According to innovation diffusion theory, change agents perform a variety of roles, such as developing a need for change, informing the client, identifying problems, building intent, and converting it into action and making adoption permanent. A change agent's efforts include compatibility with the client's needs and empathy. Are there any change agents in fintech business models, and if any, who are they? Are the clients their own change agents? In some cases, like blockchain and crowdfunding, the answer is yes. In others, because all transactions are digital and take place through the internet, change agencies have direct contact with customers, so there are no individuals employed as change agents. Due to recent developments in fintech, we believe that a change agent's role will be performed by artificial intelligence. Companies in financial and e-commerce industries need to build new processes to perform the change agents' roles. Google, for instance, being aware of future demand for personal data to track individuals' needs, is the leading investor, Google Ventures, in fintech startups. Other than Google, leading companies investing in fintech ventures in the US include Microsoft, Amazon, IBM, and Apple. As incentives increase, rate of adoption increases. Amazon offers a certain percentage of cash back for store and credit cards. The company is attracting merchants to the Amazon Pay network through swipe fees, announcing that it will pass on the special card savings it receives from the card network to Amazon Pay using retailers. The company competes on fees by leveraging scale. It launched Amazon Cash in April 2017 to appeal to underbanked and unbanked households in and outside the US. In India, 190 million citizens are unbanked, while just 37% of adults have a bank account in Mexico. Customers deposit cash without a fee into a digital account by showing a physically or digitally printed barcode at the partner brick-and-mortar retailer. Now we continue with types of innovation decisions. There are 4 types of decisions regarding adopting or rejecting an innovation. Optional innovation decisions are choices made by an individual free from decisions of other members of the social system. Collective innovation decisions are made by consensus among the members of a system. Authority innovation decisions are made by few individuals who possess power, status, or technical expertise. For example, the European Union Payment System Directive is an authority innovation decision. Finally, contingent innovation decisions are only made after a prior innovation decision. For instance, as the number of lending platforms increases, the number of credit risk monitoring and assessment platforms increases too. As we have seen, there were 5 stages in the innovation decision process. Knowledge, when the customer is informed about an innovation's presence and how it works. Persuasion, when the customer builds a favorable or unfavorable approach. Decision, when the customer performs activities which lead to a choice to adopt or reject. Implementation, when the customer starts using the new product. And confirmation, when the individual needs reinforcement to continue using the new product. Prior conditions like previous practice, felt needs and problems, innovativeness, and the norms of the social system also affect the innovation decision process. Now we continue with adapter categories and time. The members of the social system can be classified into different adapter categories based on innovativeness. Innovativeness is the extent to which an individual adopts new ideas earlier than other individuals of the society. There are 5 adopter categories with different dominant attributes. Innovators, here they present a very small number. Innovators are venturesome, early adopters, here, they are respectable. Early majority are deliberate, the late majority are skeptical, and laggards are traditional. According to IDT, there are differences between earlier and later adopters of innovations in terms of socioeconomic status, personality variables, and communication behavior. Now we see in this table selected characteristics of adapter categories and their effects on innovativeness. As we see, education, literacy, higher social status, intelligence, rationality, empathy, mass media exposure, change agent, contact, social participation, they all have positive effect on innovativeness, while dogmatism have a negative effect on innovativeness. Early findings didn't find a relationship between age and innovativeness, but recent evidence proposes a negative relationship between age and innovativeness. Roger Sear concluded that early adopters have higher socioeconomic status than late adopters. On the other hand, the Kantian dip theory proposes that individuals of low middle socioeconomic status are more innovative than individuals of high middle status because they have less to lose, especially at the beginning of the diffusion of innovation when there is a high degree of uncertainty. According to the results of recent research analyzing global fintech for rate of adoption for 20 markets, Ernst & Young, conducted by Ernst & Young, The global rate of adoption average is 33%, with 5 emerging markets being above this average. South Africa, 35%, Mexico, 36%, Brazil, 40%, India, 52%, and China, 69%. Again, this can be explained with pension diphthery or maybe the young population also. On the other hand, fintech rate of adoption for developed countries like Belgium, it's 13%. For Japan, it is 14%. Canada, 18%, and Netherlands, 27%. They're quite below the global average rate of adoption. The same study also indicates that the highest rate of adoption is observed at ages 25 to 34, and almost 48% we see there rate of adoption, while it is lower for older ages. As people get older, the rate of adoption drops from 41% to 30%, and finally to 22%. And the younger ages, it's 37%. Although IDT doesn't suggest any relationship between age and innovativeness, early evidence indicates that younger people use fintech more than the older ones. Time is an important dimension of IDT since rate of adoption is measured in a given period of time. Taking time into consideration allows researchers to compare rate of adoptions for different social, demographic, and cultural groups. Recent technologies are diffusing faster than previous technologies. It took 75 years for telephones to reach 50 million users, whereas Angry Birds was used by 50 million people within 35 days. Instagram was used by 300 million people within 4 years, and WhatsApp had 700 million users within 6 years. According to research covering the diffusion of 15 technologies in 166 countries in the past 2 centuries, it takes 45 years on average for countries to adopt new technologies, although this average varies significantly for particular technologies and countries. Overall, newer technologies have been adopted faster than older ones. The diffusion curve for proximity mobile transactions, near-field communication, quick response codes, Bluetooth technology, and etc. in Figure 3 exemplifies rapid adoption. By 2020, it is expected to have been adopted by the 26% of the population using mobile phones, which means it will reach by the early majority stage. So this is the proximity mobile payment transaction curve. It ends just before the pandemic. So the next slide, we will see the recent numbers. In here, on the y-axis, the adoption rate is shown, and on the x-axis, time appears. And the table does not hold data from COVID-19 pandemic era. And we will see that this is a recent news. Worldwide NFC technology use surges over last 24 months, I believe, due to the effects of the pandemic. And a BI research study sponsored by the NFC Forum revealed that 85% of consumer respondents who were surveyed across 9 countries have used an NFC contactless card or mobile payment wallet, while contactless payment card usage has increased 30% over the last 30 years. I mean, for an innovation, these are really very big numbers, as we have seen. The adoption of an innovation leads to the following types of changes in the social system. Desirable versus undesirable consequences. Desirable consequences are the innovation's positive effects on the social system, whereas undesirable consequences are its negative effects. For instance, the widespread usage of automation in banking generated cost savings, whereas many middle-level white-collar workers lost their jobs. In the current unequal socio-economic system, innovations usually increase inequality, as will be discussed below. Direct consequences versus indirect consequences. Direct consequences appear as soon as the innovation is adopted, whereas indirect consequences appear later as a result of the direct consequences. For example, Facebook, Apple, Microsoft, Google, Amazon, in short, FAMGA, are making the majority of investments in fintech industry. This is the direct consequence of adopting fintech. On the other hand, through these new technologies, FAMGA companies will serve bigger markets within a very short period of time, whereas small companies will not be able to enter the market, thereby creating more economic inequality. Anticipated consequences versus unanticipated consequences. Anticipated consequences are the expected changes from the innovation, whereas unanticipated consequences are the unexpected changes. For instance, approximately 50% of jobs in finance and insurance are expected to be at risk due to the adoption of fintech. Now we continue with evaluation of international fintech industry using the IDT framework. In this section, various indicators related to the international fintech industry are discussed and compared using IDT components. We will discuss the underlying reasons for rate of adoption variances in different fintech solutions in terms of the relative advantages introduced by IDT. Now, in table 2, we see a comparison of fintech categories ranked by adoption rate in 2017, showing that money transfers and payments have the highest rate of adoption. While insurance services have increased from 2015. In 2015, it was 8%. Now it's increased to 24%. The relative advantages of new payments and insurance services are ease of use, faster and more efficient services, and 24/7 accessibility. Uncertainty and risk levels are somewhat lower than innovations in other categories. In contrast, borrowing services like P2P platforms have higher levels of uncertainty and risk, so it is harder for borrowers to find funds if interest rates are not compelling. Regarding the compatibility and complexity dimensions, new payment solutions have become necessary due to the growth of global e-commerce. Credit cards here. We're already using credit cards, making money transfers through banks, and buying insurance policies, which means payment and insurance innovations were consistent with current practices. The triability of payment services is higher than other fintech innovations since adopters can use them in everyday transactions, even for very small amounts. Observability was not so high in fintech innovations like mobile phones or tablets. Crowdfunding may have higher levels of visibility and effective use of communication channels due to widespread use of social media platforms. The use of change agents may increase rate of adoption for financial planning and borrowing services. All right, now we will continue in this slide with cross-country indicators related to fintech within the IDT framework. Table 3, which presents the top 10 country rankings for fintech deal value and volume in 2017 shows that the US and UK are the leading countries. Yeah. The US and UK are the leading countries, while 12 countries are ranked in top 10 for either fintech value or value. So among the deal values, we see the ranking of top 10, and here we see the number of fintech startups. So the main questions are, what are the underlying factors influencing the adoption rate of fintech is the question we're trying to answer. Is innovation or e-commerce more influential on the adoption rate? So table 4 here presents the top 10 countries using the Bloomberg Innovation Rank, largest B2C markets, fintech adoption rates, and internet penetration for 2017. Bloomberg 2018 Innovation Index rankings are used, and countries in this table here we have given, they are marked as bold, showing the flags also. So these are the countries, they're also listed in the fintech and fintech deal value and volume, okay, in the previous table, to determine whether it is the innovation aspect or the commerce aspect increasing or affecting the fintech use or adoption. So as we see in the innovation rank, only 4 countries from the previous table, Sweden, Singapore, and Germany, France, are listed. So while in the commerce list, we see 7 countries, 2, 3, 4, 5, 6, 7, while on the innovation we see 4. So it seems that the commerce is having more impact on the adoption rate of fintech instruments. 7 countries: China, US, UK, France, Germany, Canada, and India. Other than that, I also checked the fintech users adoption rates and internet penetration. So in the fintech users adoption rates, we have 1, 2, 3, 4, 5, 6 countries from the previous table. They're almost the similar ones here. The commerce and fintech adoption rates shows quite similarity. We can see that China, they're here, UK, here, India, here, and Australia. Like Germany, we have US, so they're quite similar, these 2 tables. And here we see the internet penetration. These results suggest that the fintech industry goes more rapidly in countries with a large B2C transaction volume than in more innovative countries. I mean, the most innovative country in the world seems South Korea, while the South Korea is not listed in the fintech users adoption list. This raises the question of whether fintech is a diffusion of innovation or is it a diffusion of trade. The answer may be both. The initial step in IDT is to recognize a problem or a need. Countries with high B2C volumes have a need or demand for fintech solutions. For the adopters in these countries, relative advantage, compatibility, and trialability levels are higher, so fintech innovations diffuse faster. What about South Korea and Japan? They are both listed in the B2C commerce markets and Bloomberg innovation rankings, where South Korea has a leading position, yet it is not listed in the top 10 fintech deal value or volume rankings. The reasons for the slow emergence of fintech rate of adoption in Japan and South Korea may be a social structure, norms, and the communication and decision behaviors of users or adopters could be explored in future studies. The reasons may be social structure, norms, communication, and decisions behaviors of the adopters. For instance, Japan has a highest proportion of cash in circulation to GDP among developed countries, and projects are underway to develop platforms using everything from QR codes to blockchain technology and digital currencies. According to the results of a recent research, again conducted by Ernst & Young, analyzing the global fintech users' adoption rates given in Table 4, China has a leading position with 69% rate of adoption. The global rate of adoption, we have said, it is higher in emerging markets, while it was lower for developed countries. As stated in Table 1 in previous section, according to IDT generalizations, early adopters are more literate, educated, with higher social status and largely sized units. These are the expected characteristics of adopters in developed countries, which suit the countries in innovation ranking. While in fintech diffusion, rate of adoption is much faster in some of the emerging countries like China, India, Brazil, Mexico, and South Africa. The reasons may rely under another generalization, which states that earlier adopters are able to cope with uncertainty and risk. Additionally, they have more favorable attitude towards borrowing money. Again, further research can investigate the issues related to fintech adoption in emerging markets. Now, Table 5 presents a combination of the results presented in Tables 3 and 4 for 12 countries listed in Table 3. Germany, as you see, is the only country listed in all top 10 rankings, followed by US, UK, and France, listed in 5 of the top 10 rankings, while Hong Kong is just listed in one ranking, one indicated. Again, these results suggest that the fintech industry goes more rapidly in countries with a large B2C transaction volume than in more innovative countries. This raises the question of whether fintech, again, is a diffusion of trade or innovation. I have discussed this. Now I will continue with just a summary of the expected consequences of the Payment System Directive PCD2. This section discusses the expected consequences of the revised Directive on Payment Services, PSD2. In 2018, EU member states are expected to implement PCD2 in their national laws. And Turkey is also following them, I think by 2020 or 2022. These rules apply to all payments and accounts in all currencies within the EU and European Economic Area countries. In the forthcoming slides, we will see Figure 4 presenting the expected effects of PCD2 on the financial system, including the payment system, banks, fintech companies, and consumers. The directive's main objectives are to enhance integration, promote innovation, and increase transparency and efficiency with third-party account access. The new directive expands the range of service providers, including non-banks, allowed to operate in the EU, which will encourage competition. For instance, In e-commerce payments, payment initiation service providers establish a software bridge between a merchant's website and the online banking platform of the payer's account to initiate internet payments based on a credit transfer. Such services offer a low-cost solution for customers to shop without payment cards. And PC2D2 accelerates industry disruption by legalizing new forms of payments institutions and introducing new interaction models. According to the directive, banks have to share their application programming interfaces with third parties. PCD2 also enables consumers to use third-party providers for financial services so that customers may use Facebook or Google, for example, to pay bills, make transfers to their friends using their current bank account. Banks will be competing with every licensed third party, which will increase competition in the financial services market. Therefore, banks have to prepare for changing market conditions as well as the compliance requirements of the PSD2. They can create innovation and differentiation through, they do create innovation and differentiation through collaboration with fintech companies. Account information service providers will provide the user with the aggregated online information on one or more payment accounts held with one or more payment service providers and accessed via the online interfaces of the account servicing payment service provider. This will allow customers to view their financial situation in real time. Another objective is to improve customer protection, such as the regulatory technical standards with the EU Commission adopted to strengthen the security of the payment services across the EU. And here we see the summary. Desirable consequences for the payment system are integration, transparency, regulation, efficiency, non-bank entrance, reduced cost, increase in digital and mobile payments. The anticipated consequences for banks are compliance again with PSD2 and the regulatory securities, increased competition, collaboration with fintech companies, and also we have direct consequences for fintech companies. They'll be account information service provider, or they can be payment initiation service provider, third-party account access, desirable consequences for consumers, consumer protection, integration of financial services and businesses, P2P payments, increased international e-commerce, well-informed consumers. So I'll just summarize the concluding remarks and the conclusion part. Innovations having direct economic significance and perceived as most rewarding while involving the least risks and uncertainty should be accepted most rapidly. For instance, money transfers and payments have the highest rate of adoption, while insurance services have the highest speed of growing rate of adoption due to relative advantages, high compatibility and trialability levels, and low level of complexity and uncertainty. New communication channels are added to mass media channels and interpersonal channels. Almost all of the fintech transactions occur through the internet, where the change agencies have a direct contact with customers, and there are no individuals employed as change agents. Due to the recent developments in fintech, it can be expected that a change agent's role will be performed by artificial intelligence. Companies in financial and e-commerce industries need to build new processes to perform the roles of the change agent. For instance, Google, aware of the future demand for personal data to track individuals' needs, is the leading company investing in fintech startups. The leading companies investing in fintech ventures in the US, other than the Google, are Microsoft, Amazon, IBM, and Apple. It doesn't suggest any relationships between age and innovativeness. Recent evidence indicates that younger people use fintech than the older ones. Newer technologies have been adopted faster than the older ones. Developments on the internet and new communication platforms are some of the main reasons which accelerate the speed of diffusion. Diffusion curve for proximity mobile transaction in an example for the fast speed of adoption. By 2020, it is expected to be adopted by 26% of the population using mobile phones, which means it will reach to early majority stage. The widespread use of automation in the banking industry with generated cost savings is an example of desirable consequences of a fintech innovation, whereas many middle-level workers losing their jobs and increasing the level of inequality are undesirable consequences. The investments of Facebook, Apple, Microsoft, Google, and Amazon in fintech industry are an illustration of the direct consequences of fintech innovation. Indirect consequences can be illustrated as, with new technologies, big companies will serve bigger markets in a very short period, where small companies will not be able to enter the market, creating more economic inequality. Okay, so this was the end of presentation. Thank you for listening to me. And thank you for joining the presentation.